Hello, everybody. This is It Takes a Village podcast. Hope everybody's enjoying. My name is Lorenzo Evans and my co-host, Ariana Turner.
Blessings, everyone. Hope the week and the weekend has been full and a blessing for you.
Definitely. So we're gonna have fun today. We've got two brothers today that's going to give us an information that is definitely something that I think that's needed in our community. So we're going to really have a good time today. Again, this is the Takes a Village podcast, and we're just super excited to bring people on that we know is going to benefit us as we go forward in life. So with that being said, we're going to bring both our guests on, Maure Tiller and Raphael Kirby. Got them both on. Can both of you guys hear well?
Okay. Yeah, I can hear you doing.
Good. Wonderful. Now let me, before we get started, I want everybody to know that the information you're going to receive today is going to be life-changing, because so many times we attempt to do things and we get the wrong result because we got the wrong people behind us. So our thing today, we want to make sure that if you're trying to be a homeowner, that you have the correct information, the right people behind you, and they can assist you to either get a home or they can put you in a position to get ready to purchase a home. And when I say that, I don't mean buy a house, because anybody can help you buy a house, but they help you buy a home. That means that they are invested in making sure the place you get is the place that you want. So with that being said, Ariana, you want to tell everybody a little bit about the two magnificent men we have on here today?
I would love to. As Lorenzo alluded to, we have some guests that are really going to open up abilities and strategies for you to really stepping into your dreams. And speaking about dreams, today I can't wait to hear about Mr. Raphael Kirby. He is a part of Atlanta Realtors Association. But in connection with that, he still manages to connect his passion of supporting youth beyond sports. But in that, he has gone to the University of Miami, where he has been able to major in business management, and then came back home to invest in his community. And here at the It Takes a Village, we are big about investing in our community. And so we're really excited to have this gentleman on. Not only has he prided himself in real estate and making that a real path for us, but he is also recognized amongst realtors as the top producer in Atlanta's Realtors Association. So it's an amazing accomplishment and great job. And on his side, partnering with him in his amazingness is also Maure Tiller. And Maure has been in the real estate and auto finance business for well over 12 years, comes with a wealth of knowledge in finance and management, being able to go throughout different realms of finance, from repossession all the way up to you staying in that home. And so I'm really excited to hear from these two gentlemen about the mortgage world and how we can benefit as a village and take advantage of this knowledge they bring to us today. Welcome, gentlemen.
Thank you.
Appreciate that.
Appreciate it.
Yes, we're definitely excited. So we're going to start this thing off. Like I said, we're going to dive right into it because we've got so much information that we want to extract from you two gentlemen. First of all, let me ask, what is the first misconception, and either one of you can take this, that people have when it comes to not being able to purchase a home?
I'll start it off. I think the biggest thing is a lot of people think they may need 20% down or 15% down to purchase a home. But as a first-time buyer, and I'll let Maure go more into this because that's more the lending side, really you only need 3%. And on FHA is 3.5%. So just getting your foot in the door of purchasing as a first-time home buyer, there are a lot of perks with you purchasing your first home. Now, if you want to purchase another, and we'll get into that probably a little bit later, there will be more, loopholes you have to go through and more down payment, a bigger of a down payment that you would have to use to purchase. So, Maure, if you want to touch on maybe the first-time home buyer options, 3.5% down FHA opposed to the 3% down conventional loan.
So for sure. So if you haven't bought a home in, I would say 5 years, conventional, you qualify at 3% down. There's 3 different kind of loans as far as residentials: FHA, VA, conventional. Conventional requires typically over 680, give or take, score or higher. FHA, I've seen they be anywhere from 590, 600 or above, up to 670, give or take, for FHA right now. Of course, there's more liability, there's more to the loan than just that. Of course, you qualify with income, your credit score. Your credit score is averaged from 3 different bureaus, TransUnion, Equifax, Experian. So we take the middle score, and that's your deciding, we call FICO score, for your cost of your rate, for your rate you qualify for. In the current market right now we're looking at around 7%, give or take, at this moment in time here. At this time, there's a lot of fees involved with it that I can dive into later on in regards to that. Here we had different programs too. Just to touch bases on the rates being high, we do offer a program called a temporary buy down. There's different kinds of buy downs. Typically, there's a 2-1 buy down, there's a 1-0 buy down, 3-2-1 buy down. Basically, what that means is you qualify for 7% on a 2-1 buy down. Your first year, you get 5%. Second year, 6%, and then goes back to your 7% rest of the loan. The good part about that, what Supreme offers, is that whenever you refinance, when the market gets better, we do cost of business free for refinancing. Refinance is when you take your current mortgage and you put it in the market to refinance with a rate and term, as far as lower rates, different terms and whatnot. Back in the day when the market crashed, the reason why it crashed because the rates were adjustable. Of course, that meant that rates were fluctuating, payments would go up and down. A lot of folks got foreclosed on. Now they made it's all fixed. Fixed means that life of your loan, your rate is fixed, and there's nothing going to change as far as in regards to that inflation and whatnot. So, I'll let Artez kind of Raphael dive into the current market and current negotiation part now.
Just some stats that I would like to hit on, because there is a lot of uncertainty in the market, right? There's a lot of people just pointing out the negative, but you have to understand that when you create this different type of mindset for yourself and understand that there are still wins in the market, you too can still get in. That's the biggest thing, is us is understanding and getting in. And a lot of negative news is why it's there. It's the news because it's negative, right? No news is a lot of times going to be as positive. So yes, mortgage rates are at 7%, but like Maure just mentioned, there are ways that you can structure the loan to get around that. The biggest one right now is the 2-1 buy down. So what we're doing is we're negotiating for the seller to pay closing costs. And what that is, you have your down payment, you have closing costs when you're buying a home, right? In the market just 6 months ago, that was non-existent, negotiating for closing costs. You're paying your down payment plus another 3% for closing costs. So Lorenzo, to answer your question as well, another big misconception is I only have to bring my down payment. No, you have to bring your down payment and another 3% for closing costs. Those are the two costs associated with buying a home. So in this current market, we're able to negotiate for closing costs. And if a seller is willing to pay up to 2.25% of the purchase price, obviously Maure would get the contract and he'll see that that's built into the closing costs, and you will be able to qualify for the 2-1 buy down. So rates are at 7%, but you would get your first year at 5%, 6%, and then back at 7%, shall you not refinance. So that's how I'm doing it and winning a lot of deals right now, because days on market is starting to go up. But the current inventory in the market is 2.3 months of inventory. And all that really means is anytime you have days on market above 14 days or 21 days, you'll start to kind of see inventory move up a little bit. Last year around this time, inventory is around 1 month, which means that if nobody else lists their house for sale, we'll run out of homes to sell in a month. The current time now, we're at 2.3 months, which is still a seller's market because it's under that 6-month time frame. So anything over 6 months of inventory is a buyer's market. So we're still technically in a seller's market. So you still, homes that are priced right and in good condition are still getting multiple offers. But the biggest thing right now is sellers are starting to be a little bit more lenient with giving out some closing costs.
And just to tag off on the down payment and all the closing costs and fees, basically you got a couple of things that factor into that. You have the cost of the rate, you have the home insurance prepaid items, appraisal credit report, required lender title insurance, and optional title insurance. So there's a lot of stuff that goes into it that, whenever it comes to that process, I'll sit down with you and break it down as far as the details in regards to that here. To kind of reverse a little bit here, let's talk about qualification and what you need to qualify for a home. So to qualify for a home, you typically need a 2-year work history. There can be gaps. That's not a problem, as long as you have a 2-year work history. With gaps, all you have to have is letter explanation. Typically speaking, it has to make sense with the underwriters and whatnot. But that's a line we can touch later on as far as we're doing that process here. But just typically, they want 2-year work history. They want the last 2 years W-2s. If you're self-employed, it takes your last 2 years of tax returns. To kind of dive into self-employed people, this is where it gets kind of tricky. A self-employed person can make $20,000 a month, right? On the taxes, it says it makes $500 a month. So what income do you think we're going to take? We're going to take the tax return amount. So this is where I tell my self-employed people, stop writing so much stuff off and stop listening to all these advice and people doing this, doing that. Count your income. If you're making 100,000, you need to at least put 70 to 80,000 on your tax return that you're making. Yes, you're going to owe. Yes, you're going to do this, but you have to have purchase power when you buy a home. And that's what a lot of self-employed people go wrong in doing that. And typically, I had to use a co-signer with that person or a second borrower to get them to qualify for a suitable loan amount here. Also, your assets. We have to verify assets as far as your retirement accounts, your any IRAs, bank accounts, saving accounts, CDs, anything that you have, we have to verify. Typically 2 months bank statements. If you pay in your last month of pay stubs. Last month pay stubs means if you pay biweekly, you have your last 2 pay stubs. If you pay monthly, your last 1. So we have to just verify the pay that you're getting so we can qualify for your loan and whatnot. So it comes into your debt to income. Your debt is like your liabilities, your credit cards, your revolving debt, which is credit cards, your installment loans, personal loans, other mortgages, whatever it is. We take that all into account and we offset it with the income. And that's what your debt to income ratio is basically. It has to meet a certain guideline for conventional and a certain guideline for FHA. FHA is more lenient. They're more of a government loan. And I know me and Raphael have had some FHA difficulties and also some wins too. But it's just how you go about doing the FHA loan and educating the customer with what FHA is and whatnot. I know on the agent side, Raphael has to negotiate, seller contributions, has to negotiate home value, has to do comps. So your agent needs to be educated in that area of doing comps and researching the market around that home, a mile, 2 mile radius, and come in with a strong offer in order to put your client in the best possible plan to action. So it takes the right leader. And like I said, we're here to just guide you along the way. And also just to kind of go back as well. Some people have issues with credit. We get this all the time. That's not a problem. Like I say, in this job, there's no judge at all. I'm here to help you. Like I say, if I never say no. There's always a yes for me, and I'm the kind of person that puts you on the plan. And if you're not qualifying today, I know 6 months down the road, you're gonna call back and say, I'm ready. Let's do it. I did I paid this off, paid it off. I did this, did that, and I'll go ahead and rescore you. Typically, we have a person named Lisa Myers. She has over 30 years experience in credit, and she's been in mortgage also. So typically we can raise scores 79 points in 45 days. And I've done one person recently, 100 points, literally in like a week, 100 points, instant rescore. So you just have to know, you have to just look at credit. You have to know credit and see, send a plan of action to me. I'll run the credit, look at it. I'll have a look at it, get it back to you, and we'll get it done. So.
Excellent. Now, you gentlemen dropped a lot of knowledge on the village. So I just want to, I love to take notes, make sure we don't miss any of the nuggets of knowledge. So just a couple of things that you guys hit on is that there is a difference. I know a lot of the people out there may think that I've never bought a home, I don't have any credit, but there are programs around first-time buyers that can benefit you. And these gentlemen know how to navigate other programs. So if you're not a first-time buyer, they can still navigate a pathway for you to take advantage of lower interest rates. I thank you, Raphael, for pointing out the current market to us and understanding what that, when we come from the seller's market and back over here to the buyer's market. So excellent. The interest rate's kind of high right now, but these gentlemen know how to find that pathway to get it down. That 2-to-1 buy down, is that, when I hear it, I think like, buy one, get one free. But it's more like a refinancing type of well, that's why I wanted to get some clarity. You talked about it would go from 5%, 6% to 7%. It sounds like that becomes like an adjustable rate.
Yeah. So basically what it is, there's different kind of buy downs. Let's start with like the simple 1-0 buy down, right? So 1-0 means that basically, let's say you qualify with your credit and your income and your everything that you qualify for. Let's say you qualify for 7%, right? That means your first year, you'll be 6%. After that, that second year comes, the 12 months later, and then you're back at 7. Then that 7 is for the life of that loan.
Oh, so if you are someone starting off who might need some support, this 2-for-1 is a good way for you to step into the elevated place you want to be financially to maintain.
And the good thing about it is that when markets get better, as far as the rates coming back down, let's say like I'm hearing from certain comments are saying that March next year, the rates are subject to come down to 5.23, 5.25, sub 5 area around March next year is what it's looking like. You're able to refinance, basically refinance your whole mortgage into that qualified low mortgage at the time. Therefore, when you refinance, that 5 you qualify for at that time is locked, fixed for your new loan. And that's it. So,
and I think what I like about it, and that's why I tell people, when I decided to bring the two of you onto the show, it wasn't because of what I heard, because I've experienced the work that you put into making sure that the process is smoothly.
yeah.
And I mean, and I think, people hear this and they hear you talk, but they really don't understand what you really do. I mean, because there was times that I was so frustrated, like, I don't want to be bothered. And I would reach out to them sometime maybe 8, 9 o'clock at night, and they would respond. And I'm like, hold up, this is new. Normally, they after 5 or 6 o'clock, you can't get in touch with them. But you always assure people, let me look into it and let me get back with you and see what we can do. And that's what I think we need, because a lot of people, when you're intimidated, if you don't know what you're doing, it's easy for you to just get frustrated and step away from it. And if somebody really wanted a home and said, well, let me wait 6 months when they didn't have to, well, now you come to get the house and everything has changed, and you probably would have been better off just dealing with it, whatever the issue may have been. So
it's kind of about customer experience too, communication. I always speak on that big time. I've been in the corporate world for years. I've had bad experiences with Xfinity, or it could be a certain company. Like, don't go to Rocket, don't go to Quicken. I think Raphael tell you about those two. So just be careful on when you pick your lender, when you pick somebody that you want to do business with, that they're going to be there for you and help you, and not just care about the money, but help you through the process, get you to the finish line. Because at the end of the day, I want to see somebody happy. Because if I did good with that person there, this person going to tell this person here, this person there, and then you're going to have a good brand for yourself. So
let's say we have some in the village who are not in the Atlanta area. So they aren't able to utilize you gentlemen as a resource. How would you suggest they navigate selecting someone quality like you two to help navigate them through the mortgage and the real estate world?
You mean outside Georgia?
Yes, sorry. Because you guys cover Georgia.
Yeah, Georgia. So
go
ahead.
Yeah, but we our business. So I'm at Keller Williams, First Atlanta, and our business model is based on referrals, and we have a network of agents that we work with in every state. We're only licensed here. You'll sometimes see agents be licensed here, maybe Florida, because it's a reciprocity. But I'm only licensed here, but I have connections with agents in all different states. So just take a quick phone call or text, and I'll make the right introduction.
Yeah,
perfect.
Yeah, I have connections in several states myself. I used to have 7 licenses in different states, but now I just have 1. But I have connections across America. Supreme Lending is based out of Dallas, Texas. Of course, they have licenses across the whole America, 51 states. But I have a connection South Carolina, North Carolina, Florida. I mean, you name it, I can definitely find somebody for you. So.
Excellent. Because I know you gentlemen, you Maure mentioned about finding someone who's familiar, who's going to do the comps. And so for our village who may not be familiar, that is like comparables, where they're looking at what the house is selling for and comparing it to other homes in that neighborhood for that value, age, price, making sure it's priced where it should be.
Right. I've seen Raphael be on 12 a.m. doing that. So.
Yeah. And I'm big on that, because numbers, and my biggest motto is I'm not going to sell somebody something that I don't feel comfortable reselling 5 to 7 years from now, because the truth of the matter is, when somebody purchases, especially I work with a lot of first-time home buyers and a lot of first-time sellers, and the biggest thing is making sure they go in and I crunch the numbers so that 5 years from now they have that equity in the home and feel comfortable with selling it. And margins and numbers are just, I love them. And, the biggest thing is making sure that you put somebody in something, understanding their goal and their why with that purchase, so that they can, accomplish what they want to accomplish from the purchase. I work with a lot of investors as well. So first time home buyers, I've gotten them in homes, and now they're turning around, renting out homes and buying another. But that all came because I knew the margin, I knew the comps in that neighborhood, townhomes, condos that allow it for rentals. And now they're starting to make money with their first asset and buying another one, and just kind of moving like that. So my biggest goal is try to teach generational wealth. And the biggest way that you can build wealth is through real estate. My mom has a background in it as a property owner, and that's kind of how I got into this business. So I love it, and I'm here for everybody just kind of just giving off this great knowledge on what it takes to win. You'll hear about cap rates. I run the numbers on those, and the biggest thing is you have to be very, especially with the rise in interest rates, you have to be very, very strategic on winning and getting a good deal in a sense, depending on what the goal is with that purchase. So comps, like Ariana mentioned, is basically what we do is we run a comparison of homes that sold within the last 6 months in a mile radius of the home that you're purchasing. The home that you're purchasing is called a subject property. The other homes that you're comparing it to are called the comparable properties. So I look at square footage, acreage, the size of the whole square footage of the land itself, and the square footage of the home to compare it with other homes that sold similar to that in the last 6 months. Because when you purchase a home, there's also something called getting an appraisal done. And at that time, the appraiser does something like that, but it's more detailed because they're licensed appraisers. So I want to be kind of neck and neck with what I think it's going to appraise at so that we don't have those issues come up. And if they do come up, we know how to negotiate and get that price down or order another appraisal if we need to.
And just to kind of piggyback off that also, let's speak appraisal reports, right? The appraisal will come out to the property, and typically they look at 3 other ones, typically speaking, 3 other properties. And they're going to look at something comparable as far as bedroom, square footage. They're going to price something right in that same mile areas. And they're going to, on the report, it's going to have each of those values. They're going to have 3 of them. Some will be over, some will be under. And they're going to have every detail on that report, even pictures inside the home, outside the home. And like I say, they go everywhere from the HVAC, the framework, everything, from room to room, electricity, you name it, you do it. And also, you can go ahead and talk about inspections, Raphael.
Okay. When you get a home, the biggest thing now that we're starting to see is people are keeping their due diligence period and not waiving everything, which I never wrote a contract waiving anything because I don't advise that. But last year around this time, people were waiving something called the due diligence. The first 5 days of going under contract, so the first 5 days from you get your offer accepted is when you do all of your inspections and negotiate for any repairs. And we have a team of vendors that we use to send out to get the home inspected. Anything negative from that inspection report, we ask the seller to fix or give a credit for the buyer to fix on their own. And from there, negotiations kind of go back and forth. And in that time frame, the buyer also has an option to back out. They're just not filling the property. Financing is starting to kind of look crazy. Or the inspection is just horrible and nobody can agree on the repairs. So that time frame is what we also do as agents that you don't see is negotiating for repairs, negotiating for, like I said, appraisal. And it's typically a 5 to 7 day window when we do that.
Yeah, and what I like when I'm listening to you, I like the fact that you understand the assignment, I would say, because a lot of times when we think of generational wealth, we think of money. Money is not generational wealth. Money is just money that's left for you, because once that money's spent or gone, you have nothing. But when you have wisdom and knowledge, you learn how to create your own money going forward. So sure. I like that you're not just like, that's why I tell people, you're not just trying to buy, get somebody to buy a house. You're trying to get them to buy a home, and it's something that's worth investing in, something that if they first time homeowner, hey, 5 years, get back with me and we can, do something different. So that's what, to me, creates someone who's a good realtor, a good mortgage loan officer, because you're looking down a road, not just for this one property sale.
Right.
So, I mean, I have dealt with some people.
You told me, I know.
I remember once I was looking for a house, and this is not a joke nor exaggeration. We walked into the house, and it's been like years ago, and the house it looked like it had like a dungeon in the bottom. It was real dark, and they had hospital beds all throughout the house, and it looked like a tornado hit it and people left out. I'm like, why are you trying to even show us his property? Once we went to a house, and these are just things people don't understand why you have to have good people. Once I went to a place, we knock on the door, and it's a homeowner in the house saying, my wife's trying to sell it, but I'm not, because we're going through a divorce. And I'm like, so don't you think somewhere along the you should have, checked into that? So you have to make sure the people that you're dealing with knows their stuff. They know what they're doing. So I like the fact that you're looking at this as not only as a, let me get my little commission or whatever, and let me make my money go to the next one. You're saying, let's make sure that everybody involved is satisfied. That's wisdom. So I really applaud the both of you for that, because like I said, I've seen y'all do some magic with us, because I was like, hey, look, I'm not sure what's happening here. I'm confused. And what I like, and I want people to understand, you didn't just say, look, this is what we need to do, or this is what we're going to do. You sit down and you explain step by step by step. You didn't get frustrated. You didn't just say, let me handle it. You said, let me explain to you what we're doing and the why. So,
and, behind the scenes too, whenever me and Raphael are working together on any customer or any situation, I'm calling him, he's calling me. We're making sure everything is in line as far as the goal, as far as what we're trying to accomplish, because we want everybody's best interests. And as it comes down to, let me make sure I can get this loan at this percentage down. Let me make sure I can qualify from them for this. Let me make sure the numbers add up here. Let me give 3 quotes here. Let me go ahead and check this console here, Maure. So it's just all about trying to be on one attain. And I just think like the communication factor is everything. So
yeah. And to piggyback what Maure said about the goal is, I know when somebody first reached out to me, that's one of the biggest things and first things that I asked, what is the goal with this purchase? Right. I hear a lot of horror stories about agents, and that's fine. And I don't down any other agent, but because everybody has their way about doing things. But my thing is customers come first. So when customers come first, the biggest thing I like to know is what the goal is with the purchase, because a lot of first-time home buyers, sometimes they get caught up in, I want to buy this house and it needs to be like immaculate and a dream home. But when I get them to understand what a home is really about, is when you go in it and it feels good. And what about the wealth aspect of this purchase? Because a year from now, you can buy another home if you do this correctly, right? You just rent out this home, buy another one. Now that property is paying your mortgage on the second property, and you keep doing that. And that's how people build wealth in our community. So just figuring out and, understanding what the goal and the why is for the purchase is very important to me.
That's right.
And that's good. Because buying a home is one of the most frustrating things you can do. They say that's the top stress is trying to purchase a home. So if the relationship is bad with who you're dealing with, then it becomes even more so. But just listen to what you break down the wisdom that you have, the knowledge, how you communicate back and forth. And like I said, it's the behind the scenes part that people don't see. And I even like the fact that you mentioned, look, if you can't get a home now, let me work with you. And if you follow these steps, in 6 months, we can get you in a house. Or we can get you another house, and this house that you just purchased with us, give us a couple of years and this house can be making you money. So you're investing in your village. You're investing in those who you're assisting. You're not just looking at them like they're a client. You're looking at them like these are people who need help. And so I'm going to give them all that I can. And that's valuable, especially with today's society. It's so many people you can choose from, so many choices. But is it the right choice? That's what we need to make.
This shift in market. Go ahead. I was going to say, just like in this shift in market. In this shift in market, that is important, Lorenzo. I mean, we have meetings and team meetings every week about this, and the most successful people that are going to come out of this market are the ones that educate, right? So if you're educating people about what it can do for you and what it can build for you down the line, not just, a year from now, but 20, 30 years from now, not just for yourself, but for your kids and their grandkids, then it starts to get and feel a lot better, because I'm an educator at the end of the day. Yeah, we sell homes as a byproduct of education. So I think that is the main piece and the biggest piece, because if you're a first-time buyer or even a first-time seller, there are things you don't know, right? And if you've bought in the last 10 years, you knew how it was then, but the market has changed, right? So now I need to re-educate you on what the market is doing now. So that's just the biggest aspect I think that, us as agents need to do. Starting with myself, making sure that I also educate, because that's the key factor in purchasing, I feel like, especially in this changing market.
And speaking on the rates right now, like everybody's like, oh my goodness, the rates are so high, I'm not going to buy. Okay, you go ahead and wait, and that's fine. So let's fast forward to March or April next year when the rates come down and everybody's bidding on homes and homes are going over $20,000 over market asking price. Right now is the time to go ahead and like a home you actually want in for the house value and then negotiate the seller contribution. And then down the road, you can refinance it right into their rate in the current market status. So I just think that the education level is always important to have, be informative to your clients, your realtors, whatever it is, just always discussing that goal and the overall subject matter of like the outcome. So
with refi, and I guess because I deal with finances and I've been in the banking industry over 30 years. So what people have to realize also is that they have to do their part. If you say, look, you want to buy a home, you can't buy one now, you can get one in 6 months. Don't just keep living the same way you're doing, spending, not saving and doing that, and then come back 6 months and nothing's changed, because you can be in the same situation. Right. Or even if you want to refi, to know that, okay, for a certain amount of time, you've got to do A, B, C, and D. So when you go to the table, the better your stuff look, the more leverage you have. But when you come and everything is all messed up and you got to do all this stuff, you can still get them in the house, but you can't get the best because you've come with so much that we you have little to work with. But I like the fact that regardless of how little you have to work with, that you can work with it if they're willing to do their part and allow you to do what you need to do. So,
that's right.
It's
that's the key. Everybody's in this together.
So I love it. It's all about the village. And I have a few questions that came to my mind the village may have. So a couple of things that you gentlemen shared with us. We talked about refinancing, and you guys also talked about like the credit to debt ratio and how that impacts your credit portfolio. When you consider refinancing, explain to the village how that does or does not impact their credit to debt ratio when they're losing a loan and or gaining another one or a new one.
So there's two types of refinances. There's cash out refinance. Cash out is when you have equity in your home. Means that let's say your house is worth $400,000 and you only owe $250. That means you have close to $150 equity on your home. So you have the opportunity to go ahead and cash out, get some money for repairs or take care of some debt. Make sure it's something important. You want to build a pool in the backyard. Whatever you want to do with that cash is, like I say, is definitely detriment. It's definitely important you go ahead and use it for that reason. Of course, when you take out this money, of course, your payment could possibly increase because you're increasing your debt on that loan. The second kind of refinance is just rate and term. Rate and term means that you're basically just going to refinance the rates. So therefore, your goal is to get a lower rate. Lower rate means lower payment. So basically, what that means is you're gonna basically restructure your loan. Let's say you want to refinance in March next year, and you're basically going to go from 7% to 4.5%, right? That means your payment will be lower, and therefore you got a new 30-year fixed mortgage at a low rate. Therefore, lower payment, you're winning. So it's pretty much all about this too. As far as debt to income, basically what debt to income basically means is that we take all your liabilities. Whether it's credit cards, whether it's installment loans, like your person, you take out a loan from the bank, or you have any car payment, any other mortgages, credit cards, student loans. We take those all into factor in regards to your debt to income. So let's say you're making $10,000 a month, right? But you have let's say $4,000 a month in bills. So you're looking at roughly 60% right there. That's still sitting there. And like I say, the goal is to keep it down into the qualifying guidelines for each program, like FHA, conventional, or VA. Each loan has a certain guideline policy that it has a number it has to be at. And it's all calculated in regards to your debt and your payments on your debts each month. So FHA is more lenient on debt to income. Conventional is a little bit more tight with your debt to income, meaning that it has to be like a lower percent. FHA is more lenient because FHA is government and VA is government. And conventional is not. Conventional is non-conforming. Basically, that's not. It's outside the government. It's more lenient. It's more flexible.
Okay.
So when people look, this is for Raphael. When people are looking for houses, I know, like you said, it's not a lot out there, so they have to be selective. I think that people think that once they see something and say, "Hey, I'm interested," they don't understand that they need to go ahead and get that offer out there versus wait a couple of days, to think it over.
Mm-hmm. So how it works is it starts at the qualifying call with me. I figure out what you want, what you're looking for, what area, and what Lorenzo is hitting on is when you find that home. I like to go out and see 3 to 5 properties, right? Anything over 5 properties, they start to kind of look similar, and you like, I'm tired, and I can do it all day, but I understand. So after looking at that home that interests you and you feel like this is the one, it's time to make an offer, because the biggest thing is this, right? You making an offer, you still have contingency dates. You still have ways that you can get out of the contract if you just feel like for some reason it's bad inspection or, it's not the one anymore. Get the offer in, because if it's in good condition, if it's priced right, even in this current market where we're at 2.3 months of inventory, right? It's still considered a seller's market because it's under 6 months worth of inventory. Get the offer in, because properties will still go in a multiple offer situation if they're priced correctly, in good condition, and location does matter. So getting that offer in, it doesn't mean that you're, going to buy it like without doing all of your inspections and contingencies and due diligence, but you want to get it in before somebody else does.
And also, wouldn't that be a advantage in a sense that, say for instance, if 2 people have an offer and yours is not the one that they're most interested in, I guess if you look at it like that, then if that offer drop, you're already in there, because they may say, look, let's go on and get this one that we know is going through versus try to find another one.
Correct. So what he's alluding to is a backup offer. So if there are multiple offers and there's, let's just say 2 offers and yours does not get selected, I still push to put in a backup offer, because a lot of times in that 3 to 5 days, that person that put that first offer in and they got accepted, the agent may call me back and say, hey, they're looking a little fishy. We may have to go to your offer as the backup. We've won several of those just by being persistent and reaching out to the agent. Hey, how's it looking? And building a rapport with an agent is also good in a multiple offer situation, because you do not know how many times it's like, I can tell, because I work on both sides with the buyer and the seller. I can tell just by the rapport I've built with the listing agent or the buyer's agent how the transaction is going to go. So having somebody on your side that's really fighting for you behind the scenes, and understanding that you also have to build rapport with the agent, because it's a multiple offer situation and we want the client to get in this house. Now, we're keeping all contingencies. If they don't want to purchase because of an issue with the property, then that's one thing, but we want to get your foot in the door. So sometimes it does come down to having a backup offer, especially the market we just came out of. It's just one of those things. But now we're starting to kind of see offers that are, still tight and just asking for, small things still get accepted.
Wow. I mean, it's just so much to know. And that's why it pays to, and I tell people this all the time. People laugh at me, but I keep telling people, Google is not going to always give you the correct information. People need to quit running to Google for the answer. It amazes me, well, I looked on Google and it said I can buy a house at this. No, Google does not help you.
Guidelines change every week, every day. I mean, people don't even know the rates, the market. The rate can change 3 times, 4 times a day. Like, they'll close down the system to where we like our rates. It'll be closed down because they're updating the rates and the cost of rates and whatnot, and they're updating the qualifications 3 or 4 times a day sometimes. So you can't count on Google. You have to really reach out to the professional, and we'll make it happen.
I love it. Now, would you guys? We talked about it right now being in 2 to 3 months or what do you guys say?
2 months worth of inventory.
6 months then becomes the buyer's market. When can
Right.
we expect that to happen? Do you see that happening in the near future?
See, right now, what we're seeing is the appreciation is still going up. And the interesting factor right now is that when days on market have gone up traditionally, that you'll start to see inventory creep up, right? Because more homes are coming onto the market. So now that means that, prices are starting to drop. It's a supply and demand issue. And right now we're still seeing a 12% increase in people's equity this year. Last year was around 20%. So on average price home, $430,000 property here in Atlanta, we were seeing from last year to this year, $65,000 worth of equity people were gaining in 1 year. This year, it'll be somewhere around $40,000 worth of equity people gain just from 2022 to the end of the year. So to answer that question is very hard to tell right now because inventory is still so low. But with interest rates going up, it's caused a lot of buyers not to be able to afford the same property that they could afford. So it'll be one of those things that it's very funny because typically in 08, 09, when there were a lot of foreclosures, we don't have any, right? It's non-existent right now. And it's just a very, very tricky market to navigate. And we are in a current shift in the market, and agents are feeling it. Buyers are starting to feel it because of the rate. But I feel like once the rates come back down, like Maure said, around that 5% window, we'll still just keep moving up. And what you have to also be careful with is when you're reading stuff, a lot of stuff that you're reading is nationally, right? It's national news. When you read about Georgia and hyper-local stats, it's one of the most moved in places, right? People are moving to Atlanta from all over. So you have to be careful and really have to hone in on the hyper-local stats of where you're purchasing that and where you are, because if you just read the news, nationally it may be, going towards that way. But when 200 people per day moving into Georgia last summer, I don't, I don't foresee it ever going and being in that 08 space.
Wow. And this is something also I will say this, because I want people to understand that this is, we're speaking from experience from dealing with you as well as from, what we know you've done. And what I always do whenever I purchase a home, sometimes I still go by and look and see what you're listing just to see what's out there. And I have yet to see anything close to what we got. It's like this was the home for us, and I've seen nothing else in the price range, nothing else with what it was just that's why I say when you see something that you want, go for that, because if that's one for you, it's for you. And if you miss it, it may not come around again.
That's right.
Yeah, that's a great point. I mean, and the biggest thing, and it's hard, because our license, when you get a real estate license, says salesperson, right? But for me, coming out of the world I come from, I'm not a salesperson. I'm an educator. So it's hard to tell someone, hey, get that offer in now. But I'm like, we looked at 7 houses, and you actually stop and want to go back and see this house. So you may want to consider putting in an offer. But it's hard because my motto is I'm not going anywhere, right? If it's not now, I'm not going anywhere. So the best time to buy a house is when you're ready, financially, mentally, spiritually, whatever you believe in. But I know that it can do for you. So that kind of makes a very hard space for me. But I'll never drop my morals of, how I am as a person because I'm trying to sell a house. I really still believe that you have to want it. And telling somebody that, hey, put the offer in now, that is correct in what Lorenzo is saying, but it's so hard sometimes, and getting over that, because when you walk in that one, like I told Lorenzo and Greta, you're going to know. And we can look at 30 houses before that happens. I need you guys to, want this house. So that's just, kind of what my motto is as it pertains to putting in an offer and, moving forward with the home buying process.
Thank you, Raphael, for sharing that, because that was going to be my next question for you, gentlemen. I have had the privilege of being in finance too. And for some reason, when you get to talking the numbers with people, math, and it scares them. And then you guys talk about home inspections. You guys are all in people's credit and finance. And I love how you shared with us how you give them the knowledge to make them comfortable. But I'm someone who's in their mind not worthy to get a home. What would you say to them today to encourage them on stepping into this scary transition?
Well, I think the main thing is you don't ever want to make anybody uncomfortable. When you deal with somebody's money, that's a sensitive topic. because people, you work for your money and you save your money. It's a big transaction. This is a lot of money you're moving at one time. $25,000, $35,000 wiring into an attorney at one time at your own account. So, it's typically sometimes a lot of money. It's a big transaction. So, I always tell people, it's like I work with people with no money in their accounts, negative accounts. Other people who have 4 million, 5 million sitting there in their account. I work with all kind of a variety of people. And like I say, you never want to judge anybody based off accounts, based off that. And, the main thing is you're building a relationship with somebody and you're leading across. I think I read recently that the most stressful jobs in America were stockbroker was one. And then number 2 was like mortgage loan officer, that field right there. So just to kind of piggyback off of that, saying that it can be stressful at times when you're dealing with somebody and you're having to break down, like, what's this fee here? What's that there? What's this there? But just letting them know this is how the process works. This is where it's coming from. Breaking down even everything from the credit pool report fee, everything from that to the appraisal fee of $570 to $770 a month, taxes and insurance, prepaid items, going through everything and educating. Why do I pay that for? Why do this for? So just trying to educate this person in regards to like how it works. And closing costs. I ain't paying closing costs. You get like a lot of people that don't want to come out their pocket or just get like sensitive or push back. But you let them know, you like Artez and Raphael said, you have to be informed to educate that person in regards to what they're buying and why is it so important. And you're not buying a car where you walk off the dealership and dropping $10,000. You're buying an asset. You're buying something that's going to give you money back within 6 months to a year, maybe no longer, but you're going to seek the benefits later on. So just speaking up to the positives, you always want to put pros and cons out there. But I just think that holding somebody's hand, being that financial counselor, being that friend, being that person that has care, I think that's the main thing.
Okay. Mary Barnes has a question. She said, what is your radius and mileage? Is there a limit to your coverage area-wise?
Say one more time, Lorenzo.
All of Georgia. All of Georgia. I specialize in Cobb County, in the city, and down in McDonough. Those have kind of been my areas of where I've done a lot of business. I live in Mableton, but I also, service outside of Mableton in the city. When I say in the city, that's inside the perimeter and right outside the perimeter. So I grew up in Gwinnett County. I service all over there.
I did a deal in Valdosta. I did a deal in Statesboro. I've done one in Logan'sville.
I'm going that far.
I've done deals everywhere, but I specialize in.
But that's when it goes back to like I have an agent I work with in Macon. I have an agent I work with in Savannah. So we can still make the connection and pretty much cover all of
Georgia. Okay.
Now, do you gentlemen have like an FAQ sheet that you provide your customers or clients? Because you guys gave some really good tips about giving them the comfort, like what these different, like I got my credit pulled, why they charge me for it? Like those little things like that.
I do have a 8 to 9 step process on buying a home, with the last step being closing. And I can actually, if I get people's email, I can send it out to them.
Yeah, I can. I have an 8-step process to home ownership, also like a marketing material that can go out to. I send it to you all also.
Since you mentioned it, I think this is a great time before, and we'll do it again before we leave, to drop your contact information for those that are watching so they can jot it down.
Yeah, because I know a lot of people, and I know even for us, when you're first thinking about buying a home, if you haven't ever dabbled in that or nothing, you don't know who to talk to or whatever, and it's very important that people have someone that's trustworthy. And like I said, you're not just about trying to put a person in a house. You want to put them in a home. You want to give them generational wealth. You want to get them knowledge. So, and like you was telling us, I want you to understand the process so you know what you're doing. So when we're communicating, I'm not saying stuff that you have no understanding of. And I think that's one of the worst things a person can do is start talking stuff, and it's like, okay, we don't understand what you're talking about when you start saying certain things.
Right.
And they can intimidate a person to back away because they're scared to ask questions. But you have to ask questions.
Right. And at the beginning, I go through the whole process. And then when we're out looking at property, I go through it again. Like, okay, we're making an offer on this one. This is the process from here. Here are the steps from here. This is what's next. This is what's next. And also, I have to give a credit to, Maure and his lending team and helping me and getting that part done, because if it's something with lending, I may know the answer, but I'm going to still, call on him to answer it, because I'm just big on professionalism and him answering that question. And also, once we go under contract, I have an assistant and a closing coordinator that transacts the contract from the contract to the close aspect. So if I'm out showing property with Lorenzo and there's something that's coming up behind the scenes, I also have an assistant. So I have to give a huge credit to my team and getting those things done.
Yeah, in my end, I have an underwriter, assistant, processor, funder, closer. I mean, like I say, it's a big team behind me. I mean, we can close loan in 8 days. So imagine that.
Right.
It takes a lot of moving parts behind me. I'm just the front guy, and I mean, it's a whole team behind us too. So,
right. And that's why we say it takes a village. That's why that's part of why I created this podcast, cause I want to get back to the village concept where we help one another to better ourselves, to be the best version of ourselves. And people don't understand, when you purchase a home, it's almost like, going through childbirth, the pains and the anguish, and I want to do this, but once you actually get in that home, it's so worth it.
It is.
It's like, wow, this is, and again, I want people to understand the process, because when we did our, we're working with you and everything, we had so much that we had to do, and you just walked us through it, and it was just like, I mean, it happened so quick. It was almost scary, because we wasn't even in the market to buy our house. We wasn't really looking. We were just kind of playing around, like, let's see what's, one of those what if. And then, before we know, within 30 days, everything is done.
Right. Yeah, and also that's a credit to you, Lorenzo and Greta, because y'all did the things that we asked, like you mentioned earlier, to be in that position, right? We can make things happen, but we're all in this together and understanding, and yes, I can get you in this home, but I'm going to also need you to meet me and do these things. It may not, like you said, be now, but 6 months from now, after you come out of that credit repair program with Maure and his team, I hope you've done those things that they've asked you to do, and not look at us like, the bad guy because of things you haven't done. So we're all in this together, and understanding that it takes a village, right, to purchase a home, because it is the largest asset outside of, buying a business or something like that you're gonna purchase.
Yeah, my baby corrected me. She said it was 17 days, but who's counting? but it really, when I say that honestly, it really was so quick that, I mean, it just happened so quick. Even when we found a house and everything, we looked at a few of them, and it was every now I see something, I was like, baby, that's just not quite the one, and we'll go back and this is something that I say, neither one of you guys ever got frustrated when we said, what about? Can we wait a little bit longer? Can we look at this? Can we do that? You're like, okay. And that was, I was waiting for any minute for you to say, look, okay, wait a minute. What do you really want to do? But you never, there are some realtors and mortgage who, they get a little nasty. And I'm like, wait a minute. This is a major thing we're doing here. I want to make sure I'm doing right. So, yes, you guys really, really do it in a way that's very professional. And I think that's what we need. We need people to realize that you're dealing with people.
Right.
So with all of the and because, like it says, a lot of information that you give, and it was sometimes we'll say, look, email it to me, like, I can't remember all that. And you would say, I'm like, oh, baby, we got it, So like it's, as a village, when we work together, we can take down the giant of impossibility. We can take down the giant of fear, and we can overcome. So,
and Lorenzo, that leads me into this next great topic. And with Ariana, you asked about, the uncertainties and how can I take somebody to make them understand what it can do for them. If you look at what I just said about the equity piece, last year to this year, people gained 20% of equity in their home. You can't do that in any stock market. You can't do that in any bank. that is the largest part about what buying a home can do for you. And if you're buying it as an investment, I live with a lot of first-time buyers, 26, 27, 28 years old, buying that first property may be a condo. But if it's 2 bedrooms and 2 baths in a certain area, a year from now, you may get $2,000 a month for it. Mm-hmm. And I'm throwing those numbers out there, but that's what it can do for you and then set you up for the future. So just kind of understanding that and knowing what it can do for you. And they say that people that own a home are $300,000 more as far as their net worth than the ones that don't. So having them and understanding that and, giving out, like I said, those gems makes people understand what it can do for them.
Excellent. Now, I'm glad you correlated it to the market, because that's what my mind was wondering when we talk about things dropping and how the economy is looking. Right now, you guys mentioned it is a seller's market. And for a buyer, when would we be looking like, how they say, buy low and sell high for home buying? I feel like you guys may have hit on it. Next year, interest may be lower, but the value of the houses are going to be going for a lot more because it would still be a seller's market.
Correct. So when you have, like I said, under 6 months of inventory, it's still a seller's market. But what we're finding out in this shift is, even with it being a seller's market, you're still able to get some concessions, right? Whether that's closing costs, or if the property's been sitting for a while, we can negotiate for, under list price, just depending on, if it makes sense as far as condition. So the time to get in is when you're ready, number one. And then number two, now, because at the end of the day, we can't predict what's going to happen next year or the year after that. What we can predict is what's going on now in these hyperlocal stats that we have now. So for a first-time home buyer that's trying to get in, and them understanding that, no, it's not the same market as when your friend purchased last year, where things were going $50,000 over, 3% interest rate. This is a different market now, and you can win in this market because you won't have to bring as much cash to the closing table as you would have last year. Because not only last year were people bidding over, they were also doing something called waiving appraisals. So if the property didn't appraise, they'll just bring an extra $15,000 plus their closing costs plus their down payment. So it's a lot of contingencies that we keep in the contract that I go over with the home buyer before submitting that offer that they also need to be aware of, because it's not just the price and it's not just the closing cost aspect, it's the terms of the contract. So in the contract, you have contingencies, and a lot of contingencies we're keeping in the contracts to keep these buyers protected. Right. So one of them is the due diligence period. Another one is the financing period. And the third one is the appraisal. Right. So that third piece I hit on with appraisals is if the property doesn't appraise, the buyer can ask the seller to lower the price to the appraised value and then still purchase the property. If the property appraises for more, the buyer walks into the property with equity and the seller doesn't find out about it. What was happening last year around this time, buyers, just to get the contract, they were waiving the appraisal, or they were saying, hey, if it don't appraise, I'll bring $15,000 or $20,000 extra to get me in this home. Right. Now we're starting to see contracts come in right at that, sweet spot of, hey, I may give $5,000, but I'm not giving any more than that, or I'm not giving anything. It needs to appraise. And if it doesn't appraise, seller, you're going to need to lower the price. So we have to also, like I hit on with the price and the closing costs, look at the terms where these buyers are able to win in this market.
Right. And people need to realize that it's an investment. So when you look at it from the standpoint of an investment as well as a home, you may have to do a little extra here or there, but at the end of the day, you're gonna be the one that's benefiting.
Right.
Like you say, you may put $10,000 down, and then this time next year, you got $70,000 in equity.
Right.
So,
right.
You just have to, and that's what I like, the fact that you educate people on what they're doing, because if you just come to me and say, look, I need you to put an extra $10,000 down. Okay, now you've lost me. But when you come to say, let me tell you the why behind what we're requesting that you do, then you're like, oh, I see. So,
Right. Because on average, and that's on average, people gain in Georgia $65,000 worth of equity in their home just this year. Yeah. And that's really high. It won't continue to be that, but it'll be somewhere around that $30,000 to $40,000 appreciation.
Wow. Well, I want to just, thank you guys for your wisdom, your knowledge, for your wanting to take time out to spend time with us, giving us, because this is information, and this is something that people don't know. This is information that some people have to pay to get.
Mm-hmm.
Yeah.
They go to seminars and they go to webinars and they do, so for you to give it free, that's really it's credit to you and what you want to do and the type of men that you are. You're men of integrity, so you're men of standard. So that type of thing is very rare. So we appreciate that because as a village, we need to help one another. So we definitely tip our hat to you and appreciate you spending time, especially on a Saturday evening.
I appreciate you having me because this is an important piece on why I do what I do. And just a little bit about my story and coming from sports. I'm giving this to athletes that I played with. It's like, okay, you can play in the NFL, but the average NFL player is not gonna play for 3 years. You need to buy a house, you need to buy investment property, you need to buy and build this wealth. So that's why I got into this business. Of course, with my parents being investors as well. But it's so much knowledge, and game is free in this world if you hook up with the right people. You have to be careful. You're paying for everything. They may be just in it to sell you a course, and they might not be doing. They might not be doing what they say they doing. So yeah, and I appreciate it again for having us. Lorenzo, anytime. Yeah,
definitely.
Yeah, well, we appreciate it. And again, if anybody, we've got the information there. They can always reach out to either one of us and to get your information if they need it or if they missed it. We're continually putting your information out to anybody we know that speaking about wanting a house or might want to purchase a home or whatever. So we definitely consistently put your name out there because we know that you are true to what you're doing. Now, other than the information you're giving us, what social media platforms can they find you on, that type of thing?
On Instagram,
Facebook.
Go ahead.
Definitely Facebook. Obviously, my first and last name and whatnot. And then, of course, Instagram, the same thing, first, last name. And it should come right up, though. But I can type it in there right now. You can share it.
Yeah, I'll put my Instagram in here. I'm big on Instagram and Facebook. And obviously, I'm just a phone call or text away. And I also put in the docs. You'll see a docs link in here, a Google Docs link. And if anybody fills that out, I'll send them quarterly market stats on what's going on in the Atlanta market.
Okay. Entice us.
Yeah, it's good. And I want to say to the village, don't let me say it like this. You don't know what you don't know. So don't allow what you think stop you from attempting to do something. Find out so because the information, like I say, information, wisdom, knowledge is power, and your currency is what you know. So if they need to ask you a question, you'll never know where you need to go until you start asking questions. You may be able to do more than you think. You may be in position and not even realize it. So don't feel like, well, I don't want people to look at me like this, that, or the other, because none of us ever started out with the ability to do what we're doing. We had to work up to it. So we understand all aspects, all walks of life. Everybody in the village is valuable, and we're here to assist so that if you're not where you think you need to be, we want to help you get where you want to be. So
that's it. That's valuable. And I'm gonna say this last thing, and I'm out. And if you reading the news and understanding what they're doing with the news, it can be like draining and like, oh, everything I hear now is about interest rates. Okay, we have a solution for that, right? And the biggest thing is that you have to be careful in what you're reading, because nationally and locally, like I hit on, is totally different. And people are moving here every day from New York, California, because of it being a lot cheaper, right? And the cost of living is a lot less. So just being careful in that, because during this time is when a lot of people that understand the numbers and the market get wealthy.
That's right.
Well, like I say, we've got a wealth of knowledge. I'm so excited and elated because, like I said, I've experienced what you can do, and I know that It was some things that I even thought that I was like, I don't know if I can do this. But once we began talking, I was like, wow, these brothers know what they're doing. And I would say that made me comfortable with things that I didn't understand because I felt like I was dealing with trustworthy people that was not going to steer me wrong. So I was able to say, when you say, look, just trust me, do this, and let me show you what. And I was like, okay. And, you know, everything worked out. So again, I appreciate the hard work you put into it. I appreciate the integrity that you bring with this because integrity is key. And a lot of people out there, they are not bringing, they're not bringing in the integrity that's needed.
And the quality, you guys are giving quality over quantity, and we appreciate how you service and stand in the village to be a safe place where people can come and be serviced right and meet their goals.
Yes, and I want to say both of you. I know this is a podcast, and we're talking about the village and everything, but I just want you to know that I feel because of the freedom you give to help people, and because of your heart's desire, that you're going to be blessed beyond measure. Because what you are doing is to benefit others, and anytime you give, God has no choice but to multiply because you're doing what it takes to help others. God looks down and he applies that. So I just want you to know, if you keep doing what you're doing, eyes are not seen, ears are not heard, the things that's going to come your way. And I truly believe that. So I always want to let you know that you're doing good, but you're going to be doing better. And there's greater days ahead for the both of you.
Thank you so much.
Appreciate it. Thank you so much.
Yeah, like I
said, love what you're doing as well, and getting everybody together so that we can share this valuable information.
Oh, definitely. We have to. We just have to put it out there. We want to help people, and that's why I say that's what it takes, a village, and that's what we're here for. So again, we appreciate everything you've done, and we're going to continue to bring you on from time to time so we can keep promoting it and letting people know as things change. Hey, let's come back to the table so we can speak about it again and get more information. Right. So you're locked in permanently now. Our resident expert.
Thank you again, gentlemen, for being so present.
All right. Well, we thank you. Definitely. And we'll be talking again soon.
All right. Thank you so much. Y'all have a great evening.
All right. You too now. Bye-bye.
Village, don't forget to check out the chat with the contact info. They provided you guys direct email and social media platforms where you can navigate, get comfortable and familiar with them, and then contact them directly for any questions and guidance you may have in the real estate and mortgage realm.
Definitely. And Mary Barnes was asking about the podcast. We are on the first and third Saturday of every month. And if there's anything that you want us to speak about or any subject you want us to tackle, we're more than welcome to do that, because that's what we're here for, to assist and make sure that everybody knows what's out there for the village. Okay, and Ariana, you have any final closing words?
I just want to share with you all, even though sometimes things look like it's not for me or for you, there are things, like you will hear Lorenzo saying all the time, like there's things that God has for you beyond what you think or can fathom. And so I'm happy that, and I hope today's information and knowledge has brought you into that awareness that there are resources out there for you to step into your dream, regardless of what things may look like right now. So stay encouraged and positive towards your goals.
Definitely. And know that this is It Takes a Village podcast. We're here to help, assist, uplift, encourage, enlighten, because we want to bring back the village concept. There's so much information out there that we need to get our hands on. So again, if you have someone you want us to interview, send them our way. We'll bring them on and discuss whatever they want to discuss. Like I said, if it's a topic you want us to tackle, we will tackle any subject. There's nothing too big, too small, or too dangerous. Because we want to enlighten people, and we want to let people know that it's not about my opinion or Ariana's opinion, but it's just about wisdom and putting it out there and having an open, non-judgmental type discussion. That's what we do, because It Takes a Village podcast can only be here with the support that we have from those who are watching live or the replay. So we do thank our audience. We thank everyone that come on here and speak with and for us. We're just excited to be, able to host It Takes a Village podcast so we can help our village. So with that,
stand in agreement.
Okay, so this, like I said, we're gonna be back again on the 19th, and we're gonna have another fun subject and other interesting things to talk about. So stay tuned for more.
Our pre-Thanksgiving show.
Yes. So we got some good stuff coming up. So we're excited about it. And we're just thankful to have all of our faithful followers and realize that we're all part of the village. There's nobody that's too small or too large to be part of the village. Anything you bring to the village, we consider it to be a blessing, and we're thankful for it, and we're happy about it. So have a good rest of your day. Enjoy the rest of your weekend. And this is Lorenzo Evans and my co-host Ariana Turner, and we're just happy to be part of the village and to invite you into the village. With that being said, we will talk to y'all in about a week and a half, so y'all have a good evening.